Do you guys think that the property market is overheated? This episode, we're going to talk about the potential of it crashing down.
Property crashing is unlikely.
In a bubble, everything's going to go down.
Retail is dead even before pandemic.
Property is pretty predictable.
Property price dropped 50%.
You will get a margin call and goodbye everything.
Hey guys, so today we have Ken, the donkey hunter on my left, and then we have Benny, the serial entrepreneur, and of course myself, Juno. So today, let's start with a topic. The property market. Is it going to crash?
Let's not pray for a stock crash, but actually it's good. We can buy more.
Yeah, buy more.
Buy more.
And as you can see in recent days, what happened is that in the US market, property price have risen crazily due to low interest rate, and many people has been talking about this whole idea of property crashing as interest rate supposed to go up. So let's discuss this and see if it's going to affect you for someone watching at home or looking at investing in properties. Ken, being a big property owner himself that he don't really talk about, in his other channel, right? Share a little bit about your property investment history, and then let's begin from there. Yeah.
The kind of properties I own is like I have some properties in UK and some in Singapore. If you are renting a property to somebody, the person do not care if your property is freehold or leasehold or how expensive your property is. So there's a lot more considerations behind it. But overall, properties is a good cash flow generator, and residential property seems to be the one to invest in. And conversely, in every crisis, you will see the weak ones being cut off. So I do foresee a lot of problems in the commercial and the retail industry. Like retailers are being taken over by
e-commerce.
Amazon, e-commerce. If you look at Bed Bath, BBBY,
Bed Bath and Beyond.
Yeah, Bed Bath and Beyond. They're closing hundreds of retail outlets, and 75% of their sales are online now.
Look at you speaking like stocks language, BBB. You don't even know the company name anymore. Your brain is just
go by the ticker sign only.
Yeah.
So Juno, in your perspective as well, how do you see the property space work for people like you? I know you are big in stock, so big in property as well. So how do you see this property scene from a third party's perspective? Because we are like very deep into this scene, right? And how would you look at it right now?
I think this pandemic, it affects everybody around the globe. So there is a clear shift in demand away from the CBD areas, the offices, and then into residential in the suburb area. For myself, I own an industrial property in Singapore, which I rented it out to an e-commerce business.
Oh,
yeah.
Wow.
So it's good. It's generating cash flow for me.
In Singapore, we have this category called industrial property. Basically, it's just not glam commercial spaces for usage like storage, right? It's actually doing very well. Almost the same experience as Ken. I have property in New Zealand, Singapore, Manchester predominantly, and Malaysia. So same thing as well. We have seen this, and once again, retail is dead even before pandemic. Retail is totally dead, right? Commercial is a very scary space to invest in, and think about it, right? As more people move out from major malls and also big offices in central business district area, right? Where do they go? They will go to somewhere more affordable, or they will still need space for storage. So through this pandemic, we have seen the rise of the industrial spaces, right? Predominantly in Southeast Asia, not the biggest familiarity in the States, right? But I've also seen in the States as well, through my conversation with Ryan Serhan. If you were to Google, this is his face here, pop out. Okay, Ryan Serhan, right? One of the top agents in the most followed agents in the world, right? We have a conversation and an interview with him, right? We go details and we realize that markets is shifting. Residential is doing well in the suburbs area. People are going further and further away from the main city centers. And in New York City, we have seen property price dropped 50%.
Wow.
$3 million to $1.5 million.
Let me ask you, if it drops 50% at what to 1.5, do you think it's still worth to buy, knowing that there's still no demand in commercial real estate?
If you put yourself as a foreigner who likes fiat and want to hold money in US currency, it's smarter to hold it in a property while it is revenue generating in case your country's currency fall. But in a space like Singapore, which our currency is strong, I don't think there's any reason to do so. on a perspective, I want to hear from everyone as well, right?
How about Juno?
That if someone have 100K, especially from Juno, right? Imagine this: you have like 10K, 100K, or like just some amount, right? You have to choose one. Will you choose in property or will you choose in stocks?
Wow.
Provided you can take leverage. Right?
Take leverage. To leverage on stocks? Take
Both,
leverage?
either way, what is it? How will you play out?
The truth is, in real life, I have hands in both. But leverage on stocks, probably not. It's too dangerous. Well, currently my portfolio is about 20-30% in property, and then the rest in stock market. For me, that property is pretty predictable if you pick the right property. Even if the market crash, okay, you want a property to go to zero, it's impossible, right? You know, now I'm still young, I want to grow a little faster, so my risk appetite is a little higher. So I would go for that, about 30% in property.
Benny, how about you? What is your like percentage wise on properties and stocks?
You want me to review some numbers, right? Honestly, right, I am close to like 70-80% into property.
Oh.
Yeah. Because I just think that it's way too predictable in where I come from in Singapore, and based on the housing crunch in UK as well, in Manchester, you know, and the vacancy rate of Manchester, I'm all in Manchester because my properties are all in rented out, you know, all days, right? And some other parts of the world as well. So I'm largely big in property. Let me tell you why. Because I am very comfortable for 70% of my money to be growing at 15%. So why 15? There's no capital appreciation in 15%, guys. Don't be, I know where the comments go, oh man, where, tell me where. No, there's no, right? It's usually an average of 2 to all the way 6%, depending on the states and the country that you invested in. But more importantly, we don't forget there's positive cash flow. We don't forget that your tenant is paying down your property for you, right? So that adds up to be like 15% a year. And I'm comfortable with that. However, right, only because I have the stability, once again, I dare to go all in and be very certain about what I want to do in stocks. So it's still 30% for me in stocks. And as a 70% property in guy, I would say that property on crashing is unlikely, right? Based on the country that I invested in. Why? Majority of the country that I invested in, right, comes from a point of very low vacancy rate, which means most of the property in that city, in that states are pretty much rented out. And because of that, I have holding power. Honestly, you will only lose money if you get margin call or if you sell it at a loss.
Yes.
If you have that holding power of positive cash flow or even slight negative cash flow where you can just, force saving your way out, right? And just hold into there, you don't lose money in the long run. Lands are scarce in the long run. You're pretty much safe. Will you make 100% in property investment a year? If that is your goal, get out of property investment. Okay? Just get out of property investment. I think it's unlikely. Even if it is so, I think you'll be on crazy leverage or doing some crazy move. I strongly advise people to have a more practical goal when it comes to property investment. So can I understand, right? You are super all in the stock market, right? Say you have a few properties in the UK, right? United Kingdom, right? What would you consider doing to them? Will you ever cash them out?
I have several properties in basically north of UK, which is in Scotland. The only time where I will start to activate them, that means I might get a leverage a loan. Like during this COVID time, I remember HSBC contacting me. My interest was like 1% or was even free to a certain extent. And at the same time, when the stock market has like bottom, I would like reverse mortgage those properties and I would put the money into the stock market. This is what I'm comfortable with. A lot of people are not comfortable with it because a lot of people, when they do such a move, their thought process is they want to earn a lot of money. But my thought process is, look, I get to invest in a company which I love and I get to add position to a company I love that impact more on this world. But if you're going in the mindset of I want to make millions of dollars and you don't have that kind of holding power, okay, holding power is key. Leverage is a very bad word to use because in the stock market, stocks can go down 80%. But the thing is, if you are leveraged, you do not have holding power, at 80%, you will get a margin call and go buy everything. But if you're able to hold out like for 1-2 years, hey man, heck, you know you'll do well in the long term. Having said that, there are also shitty property investments.
I can admit, I have one. in Malaysia, Kuala Lumpur, I have one. But you know what's the interesting part? I managed to sell away just last month in this pandemic.
Cool.
Wow.
And I bought it at 15% overpriced. And 9 years later, I am still at profit.
What?
very minimum profit that I could have made more money if those money is spent on Facebook or Apple. Okay, but putting that aside, right? But in the worst downside that what's happening to me right now, I'm still profitable.
You said you made money in Malaysia property.
Yes.
You encounter for the currency depreciation like...
Exactly. That's my point. My entire capital appreciation is wiped out based on Forex. Okay, right? So I make money, but it's so thin because majority of it, right, was wiped out. I bought in when it was ringgit, which is Malaysian money. $1 sink to 2.5. Right now it's $1 sink to 3. It's go bye-bye in money. You get it? So everything got wiped out. But my point here is that the safety net of leverage is as such. Even though Forex was really against me, while in UK Forex was with us. We are doing well now, but it was against me. But the fact is that the mortgage is paid out by a tenant. It gives that safety buffer or profit, right? That even though you sell it literally at the same price, you are profitable. That is the only reason why I have zero leverage when it comes to stocks. But I am ultimately all leverage when it comes to property investment. Because that optimizes my cash flow a lot better. I can buy a lot more properties while tenants are paying off the mortgage. You have to start to separate your living expenses out of your investment portfolio. It's a big thing. When you stay in a home, you are not creating an asset. It is a liability if you're paying for it every month, right? So for those people who are buying a home and then calling it an asset while you're paying it off month after month after month, right? It's technically something that you need to reconsider, right? Because if after all, your stocks portfolio is making you tremendous growth, and then you can really see that your expenses, the cost of living is separated, whether you're staying or not, right? Then it's a pretty smart move as well.
Yes.
People need to start to separate all this category very clearly in order to see their expenses.
Yeah, next time Tesla is the same. Full self-driving. When you buy the vehicle, you can actually rent it out while you're working. The vehicle can self-drive and go and do like, Uber or Grab.
Yeah,
taxi.
a lot of people are talking about the eventual goal for Tesla where your car becomes an asset.
Then it becomes an asset.
That's crazy, man.
Yeah.
That's crazy.
It gives you like it's about 50 to 100% returns on investment.
Oh, way, man.
Yeah,
Come on,
serious.
man. In a very short run, I think that property is unlikely to crash. That's my real speculation. Purely because in most city, in most country, you see a very healthy vacancy rate unless you are in very crazy city whereby people are just there flooding money, like in some parts of China, in some parts of Malaysia for investment, right? Rather than that, you will hardly see a huge property correction because that is a physical asset that you can see. And usually, right, you don't measure it by PE. So relatively, you cannot see an 80% correction when it comes to property market. So that's my take on property.
Yeah, can I ask you something? Like, since a lot of things happen like a domino effect, in a bubble, everything's going to go down.
If it happens, it's no longer whether property will crash. It's the economy cycle.
Yeah.
Right. So we are talking about stocks. We're talking about career. We're talking about everything else as well.
Yeah.
Then to be honest, I still see that you will still have a strong support.
Okay.
Why so? During the previous crash, there were no limitation when it comes to loan. You see people go on 10x income loan, 20x, 100x of their income loan, right?
Very good
and
point.
They just keep buying, right? And there was no regards to rental yield. People are just buying thinking that property price will keep going up. Look at the current market sentiment. In most countries, rental yield matches interest rate. On that perspective alone, right, you will know that people are more on the more prudent way of investment, and you don't see multiple property tycoons from poor people. Like that was how the property bubble goes, right?
Good point.
And on that, you will not see a major correction. And if the whole market drops, everything drops. So then it's not a conversation. Everything drops, right? But however, a crash on property is very unlikely to happen in major developed city. Look at the stock market as well. People were thinking there will be a 50% correction, 85%, 99% correction, right? But the maturity of the audience, the access to buying stock, right, has greatly differed from during the 1970s.
Yeah,
right?
and the best part now is that we have the central banks having our back, man. Whatever happens, they'll come and
bail us out.
Yeah, bail us out with helicopter money.
Infinite QE, and on that note, right? Thank you for watching this episode, right? That is our perspective of property investment. See you in the next one. Cheers.